welcome to this video. This is 1stusFx. Now from this video I'm going to be teaching you how to use fair value gaps in picking entries or knowing the direction of the market. Alright, so remember the basic understanding of market structure. That is very important. I'm going to say it again and you keep hearing me say it all the time. So in an uptrend, we use higher highs and higher lows. Higher highs and higher lows. Alright, so this is a practical example of an uptrend. So when you have an uptrend just like this, so you have a low, then you have a what? High. Then you have a higher low, then you have what? Higher high. And then we have a higher low, and then we have a what? Higher high. You would notice that a fair value gap has been created in this market. So this is the previous high, and this is the low. So between these candles, you can clearly see that we have what? We have a gap. So what we expect the market to do is that the market needs to rebalance itself. So by rebalancing itself, we mean price has to mitigate this gap by coming here. So usually when we see something like this, we don't accurately call this a change of character, because this is normally in an uptrend we're supposed to see a low like this and go higher. But because we have a fair value gap here, we expect the market to mitigate it before continuing the trend. I hope you understand it, because price has to rebalance itself. So usually you'll see price make a deep movement like this before continuation. I hope that's clear. So this is the basic understanding of how to use fair value gaps. So when we see fair value gaps like this in an uptrend, we use them for entries. So basically, this is one of the ways to find an entry in an ongoing trend. I hope this is clear. Now there are different types of fair value gaps, all right, and I'm going to explain that right now. So this fair value gap I just drew out here is the basic fair value gap. This is how all basic fair value gap looks like. Now the next type of fair value gap we have is what we call the BPR, which is balanced price range. So basically it's talking about two fair value gaps that are formed on opposite sides. So let me quickly draw a picture example. We're going to look at market examples soon. All right, so take for example, we have an uptrend like this where we have high, a low, have a higher high, have a higher low, and then what we see is that the market creates a new high, creates a new low, so this is a practical example of a balanced price range. So here you can clearly see that we have this gap here, this fair value gap from these highs and these lows, and then we also have a similar one on the right hand side during the sell. Hope you can see that. So this is an example of a balanced price range. Now a way to draw this or identify this is you can just extend this from the right to the left, just like this. So what we expect the market to do is to come back to it and then continue to sell. So this fair value gap, so I have one on the left, I will have one on the right. This is what we call a balanced price range. This is why it is called a balanced price range. So this is a type of fair value gap. I hope this is clear. Now the third type of fair value gap we have which you would see in the market is, so we have an uptrend, price makes a high, makes a higher low, makes a higher high, and then we have a gap, and then we expect price to come to this fair value gap and keep buying, but instead price breaks through and then price comes back into this fair value gap to continue to sell. So this is a type of fair value gap that we call inverse fair value gap. So you usually abbreviated as IFVG. So it's an inverse fair value gap. So we expect price to come to this fair value gap and continue to buy, but instead price breaks through it. So this support becomes what? Resistance. I think it's very clear. I'm trying to be very, very I don't want to bore you with a lot of information. I just want to go straight to the point. So basically, this is the three types of fair value gaps. We have the normal fair value gaps where price rebalances itself and continues. We have the inverse fair value gaps where price breaks through it and then it becomes support or becomes resistance in whichever case. And we have the balanced price range. All right. So these are the three types of fair value gaps you will find in the market. And what did I tell you fair value gaps are used for? They are basically used for what? For entries. Yeah, it basically used for what? Entry. So price comes back to rebalance itself and continues in the direction. So fair value gaps basically works for continuation trades. So you don't use them for reversals. You don't use fair value gaps for reversals, except price has broken below it like the inverse. So it's just a continuation of the new trend. I hope you got that. So let's look at real market examples. Let's see some real market examples where we saw price create these fair value gaps and all of that. So let me take this to the 4-hour time frame. You find this a lot on the 4-hour time frame. Okay, so let's start from here. So here you can clearly see that after this bullish candle, price creates this fair value gap here. So we have this fair value gap right here. And if you notice, that is exactly where the price comes to and begins to buy from. Now, obviously, it doesn't mean every time price comes to a fair value gap, you just instantly hit a buy. There are obviously confirmations you have to look out for. We'll get that when we start putting everything together. So you can see how price bought from that fair value gap. All right. Now, let's look at another example. Okay, so here is another example. Let me quickly say this so you can also take note of it. This is a fair value gap. You notice price reacted from it and sold off. Can you see that? This is another example. We have this fair value gap right here. If you notice, price went below the fair value gap but closed above the midpoint. Can you see that? Closed above the midpoint. Let's look at another example. This is another example of a fair value gap. You can see price reacting from the fair value gap as well. This is another example of a fair value gap that price comes back to rebalance. Notice how the candles closed above the midpoint. Sometimes it's going to close below the midpoint, okay? But when the price closes above the midpoint, it gives you a strong signal that the market wants to what? Wants to buy. This whole scenario is an uptrend, so you obviously should be looking for fair value gaps for a buy signal. Okay, so this is also a fair value gap. So this is a gap here where the market opened with a gap. So this is also a fair value gap, and you can see how the candles closed within the fair value gap. I hope you can see that. All right, this is also a fair value gap where the market opened below. It's also a gap. All right, and the market went higher. Now let's look at the other type of fair value gap. Let's see if we can find something similar like that. Now we have one on the right and we have one on the left. I think I saw one the other time. All right, so I think here I have one here. So this is a fair value gap. If you notice, price did not react from it. Price just went past it. Price went above it. I hope you can see that. And then price came back to it, and then we saw this whole reaction. All right, so saw this whole reaction there. Right, not a perfect example, but we'll find. Let's see if we can find other ones on the left hand side. So you'd the balanced price range, you will hardly find that, because when you see a balanced price range, it means there was a sudden change in the trend. All right, so it means the market was in the buy and then all of a sudden it's quickly changed to a sell. So it's more like a displacement, something that happens suddenly. All right, we find this mostly on stocks like our US 30 and all of that. Okay, and then let's look at our inverse fair value gap. Let's see if we can get an example like that. Inverse fair value gap. Let me take this to the 1 hour time frame. Probably we'll see some examples there. Let me see. Okay, I'm just trying to look for a perfect example. All right, but you'll find a lot of fair value gaps in the market. All right, and we're going to talk about the ones to pay attention to. All right, when we talk about putting it all together. Okay, so let's just use this as this is a very good example. So we have this fair value gap here. So what do you notice? You notice price just keeps pushing itself higher and higher and higher from this fair value gap, and eventually it breaks out here. Can you see? This is where we see the market breaks higher and even goes above this high. Hope you can see that. And then what does market do? Market comes back into this fair value gap and uses that momentum to continue the new trend. I hope that was clear. Okay, so basically this is what fair value gap is all about. Fair value gaps are basically for entries. So when you come to the market, let's use a different market. Like, okay, this is silver, for example. Let's see, you come to the market and then I want to use a market. I don't have any of this. Okay, take for example this is a very good example. Now you'd notice we have this fair value gap right here. That price, this is a very good example of fair value gap price had not mitigated. I hope you can see it. So now that price has broken through, price will most likely come back there to continue the buy trend. I hope you can see it. So basically that's how it is. So it looks like this. Remember, they are basically for entries, right? So about 1:4 also. Hope you get that. So let's see if we can get any other examples. Okay, this is another example of a inverse fair value gap here. See this fair value gap right here. Price closes above it, retraces into the fair value gap and continues to what? To buy. Hope you can see that. So basically it's what fair value gaps are all about. I hope you understood. If you don't have any questions, just ask them on the comment section. Make sure you like, subscribe to this channel, and watch out for the next video on other blogs.